Hello and welcome to the Stansberry Investor Hour. I'm Dan Ferris. I'm the editor of Extreme Value and the Ferris Report. Today it's just little old me. Corey's off, so I'm going to talk to my old friend Tobias Carlisle. Tobias runs a couple of funds that trade publicly that we'll talk about. He's a very well-informed value guy who's going to have a lot to say on all kinds of things. So let's do it right now. Let's talk with my old friend Toby Carlisle. Let's do it right now. Mr. Tobias Carlisle is in the house. Welcome
What's up,
back.
Dan?
Yeah,
Thank you. Good to see you.
good to see you too. As we were talking just before we hit the record button, it's been 2 years, way too long. We need to have you on at least once a year, and I think probably twice.
That's
So
very kind.
we're gonna fix that. We're gonna fix that.
Well, it's been a little bit sad because I'm a small value guy, and small value's been dying on the vine. So I've been trying to keep my head down.
And yet at the same time, I hear you on returns. Okay, I hear you, but on finding stuff that you can't find above, whatever market cap you want to delineate, uh, there's plenty to find. Plenty to
I,
find. Yeah.
I couldn't agree more. It's
Yeah.
a very happy hunting ground at the moment.
Yeah. I mean,
I
yeah.
I was going to say I characterize myself as small and mid value,
Mm-hmm.
but my mid value is now small too. So I'm small cap across the board. My small is micro, and my mid is small.
Right. So, without giving away too much, we want to hide some secret sauce. But as we record this, the day we're recording this, small caps are actually a couple hours ago when I looked, they were doing pretty well today. It was like some CTA somewhere was buying the Russell 2000 or something.
Fat fingered it.
Yeah, like for 2 days or something. It's like, whoa, on the chart, it's like blip, blip, 2 days. So who knows? Your time is coming. I'm convinced of that.
Let's hope. Yeah, I track that series pretty closely, as you can imagine, like on a daily basis. So
Yeah.
I can tell you that 2 days ago was the all-time low from the peak in 2011. That's a very long way down.
Wow. Peak in 2011, he said, folks. Did you catch that? It's 2025.
Yeah, this is not an old recording. This is
This is 2000.
it's a 14 or 15 year underperformance of small against large.
Oof. Yeah. Wow. Okay. Well, and large, like lately, the largest, the mega, has actually, rather than reverting to the mean, it's done the opposite in the past several. If you look at a chart, like it's pulling away from the rest of the pack. The top 10, I think it was, from the S&P 500 is pulling away. I mean,
The market's really narrowed down. If you look at,
Yeah.
you can take of the 500,
Mhm.
490 of them are basically flat since 2022.
Yep.
And it's 10 that are the beneficiaries of the AI CapEx spend.
And are accountable. The whole return since then is accountable to them.
That's right.
And it's not nothing. The return is not nothing.
Right. It's extraordinary sums that are being invested in that AI CapEx. I
Right.
talked about this a little bit. It's like $500 billion,
Yep.
which is like, that used to be quite a lot of money, but evidently not so much anymore. And it's not like, I characterize it as being something like the late 1990s when we were building cable. It's building the fiber optic cable.
I'm glad you brought
for
that
the
up.
internet.
Yeah.
Because but the difference is that fiber optic cable's got a useful life of like 25 years.
Mm-hmm.
Whereas the GPUs have got a useful life of 3 to 4 years. So this is
Right.
we're just going to spend like this all the time.
Right.
I
Now,
don't know where it comes from.
yeah, I mean, the infrastructure around them may be longer useful life, but yeah. The thing is, it is different. There's similarities and differences. Like we all see the massive capex, right? That's obvious. And as you say, the useful life is different. Also, though, I wonder how, like, in the late 90s, that thing was always destined to crash, and a lot of us talked about it a year or two or more before then because they were borrowing money and not making a dime. I mean, they were levered up to the sky and not making a penny. These guys are gushing cash flow. Like they make more free cash flow than any 10 companies ever have in the history of 10, the top 10 of the S&P 500. I'm not just talking about the hyperscalers, but and they're the ones spending the hundreds of billions. But um, phew, how? I mean, they can keep this up. They're spending half of it. They're spending half of the cash flow on this. Like it seems like they could keep that up for a while. It's
I think that the only limit on it, the only fetter on it, is that you have to earn a reasonable return on that
at
investment.
some
And
point, right?
it's not clear how they're monetizing yet. I mean, like ChatGPT, you get your $20 a month subscription to one of the AIs.
Mm-hmm. How or if they're monetizing? I mean, it's I wouldn't be surprised to learn that nobody's really making any money off of this yet.
Right. Well, I
So
think that's the case.
yeah, but you understand what I'm saying though. Like I believe me, you and I are we're birds of a feather, and I'm a value guy, and I'm skeptical about all this. But maybe I'm just I'm succumbing as we all do in a bull market, right? We all succumb at the end. And but I look at it and I think I just feel like they can keep this up longer than WorldCom and Global Crossing could ever have kept it up.
That's certainly true, and I don't think these are scams. I don't think these are scams at all. I
Right.
think
Yeah.
these are real businesses,
Yep.
and they're making lots of money, and
That's
they're
right.
doing
There
very
isn't going to
well.
be any WorldCom Kozlowski, whatever he did.
There's some talk around the edges that maybe Nvidia is financing some of its customers. I saw a little rumor today that China makes up 40% of revenues because of they buy the older chips through some of those countries that like Vietnam buys a lot of chips, and they're not. It's probably not Vietnam. It's probably a front for China,
Right.
and at some point that gets cut off. I don't know how true all of that stuff is. I just sort of raise it as something worth considering if you're long. But the thing that really stands out to me when I look at the market is that the large caps are trading now at a huge premium to mid and small, and that's historically unusual. From 2000 to 2020, small and mid traded at a big forward PE premium
Mm-hmm.
to large, and you have to go back to the late 1990s to see this sort of large PE premium in in large caps. It's really the pandemic flipped it, and in the
Mm-hmm.
pandemic, large took off, small and mid have struggled since. And I think that if the reason is it's not hard to figure out why. When you look at the earnings for large are going vertical right now, whereas the earnings for small and mid have been mid is flat since 22, smalls are down. So I think that excluding those top 10 companies, the other 490 and then the 400 mid and the 600 smalls, all in the S&P universe,
Mm-hmm.
have been in a little recession since 22, I think. And that might be working off some of the COVID stimulus. All of that demand got pulled forward, and we're sort of right-sizing and figuring out what's happening. And as a result, all of these companies are pretty reasonably valued. I like buying, there's a contrarian aspect to being value. You got to buy these things when they're unloved, and they get unloved because their earnings look terrible and the multiples compress. But if you're a full cycle investor and you can see, these things, mean reversion
Yep.
still exists,
Right.
these things probably will recover again, and then the PEs are too cheap, and I think they will do quite well. I don't know when the bottom is.
Yeah. Gosh, that's my favorite old song you just sang. I love it. I sing it all the time. It's a
I've been picking the bottom for 14 years.
yeah.
So
That's what some of us have been. Yeah. Oh
I
well.
feel pretty positive. I think that this is always the problem for value guys, right? That you can see
Sure.
the opportunity, but you don't have any timing. There's no catalyst, and as
Yeah.
soon as the catalyst becomes visible,
Yep.
the opportunity's gone.
It's gone. Right.
You got to buy before the catalyst.
Right.
And so I like smalls and mids. I think that they're trough earnings, trough cycle earnings. So I think you probably see some improvement in their earnings over the next few years, and then their PEs will follow suit. I think it's a tale as old as time. I'm not concerned about it at all. I just think it's a matter of 2, 3, 5 years. I'm I'm sure we'll be back to normal.
All right. Elephant in the room is, I wonder if you know what I'm going to say.
I don't.
Passive. I think I saw it's like 60% now of I think of flows maybe. So, people basically mindlessly buying the S&P 500, which means at this point they're putting more than ever into the top 10, more than 40% at this point. And that the source on that I think is I think it might be Charlie Bilello, who's pretty good, right? Wow. So every time you contribute to your 401k, 40% of your money goes into those 10 companies. Those 10 that, we think are going to mean revert to poor returns that we've been thinking that for years now.
But I mean, there's two things going on. One is that's Mike Green's thesis that passive sort of sucks all of the oxygen out of the room for small and micro.
Yep.
I agree that phenomenon is occurring right now. I don't agree with his conclusion that it means you get a crack up boom and a crash. I mean, that's what every market cycle looks like. So, but of course, people invest in the thing that has been working, which has been the S&P 500
and mega
really
caps,
the S&P 100.
Yeah,
mega caps, Mag 7, whatever you want to call it.
Yeah,
that makes everything else in the world, international, value, small, everything else looks bad compared to the S&P 500, which you can get for basis points now. So it's a no-brainer that there's a whole lot of money flowing in that direction. But that's always the case. People always pile into the things that have been working. And as soon as it breaks down, everybody hits the panic button and goes the other way. I don't think that those Mag 10, I mean, they may have like a little stumble along the way. I think those businesses are pretty solid and they'll probably keep on doing fairly well. But again, in the late 1990s, you would have had Microsoft, GE, like GE's got its own problems. It had leverage and some earnings manipulation going on. But
ExxonMobil,
there were all of these big companies were trading at very high premiums, very high PEs. And from 2000 to 2015, they continued to be excellent businesses. Microsoft continued to be an excellent business. Walmart continued to be an excellent business. But because the stock prices got too far ahead of the businesses, the stock prices were flat for 15 years. In 2015, I was buying Walmart leaps and worried that the leaps weren't going to, and a leap is a 2-year contract to buy these things. And I was buying them basically at the market. And there was no volatility because they'd done nothing for so long. So the calls were very cheap. And so I'm just using that as an illustration of like how unloved they were just 10 years ago, the large caps. And so I think that that could easily happen again, where we have a decade or more of large caps still doing very well as businesses, just the stock prices don't perform as well because they get too far ahead of themselves. And in that period of time, people will look around for better opportunities.
That's the next song on my favorite album.
It's inevitable. It's happened countless times before.
Yes, it has. And every time at this moment, people talk about it like everything's different now and it'll never happen again.
I posted on my Twitter, I post these charts on my Twitter just saying, look how many times this has happened before. And there's inevitably someone saying, I think people are a little bit self-aware. They're like, I hate saying that it's different this time, but it is different this time. But railways were transformative. The internet was transformative. All of these things, the telegraph was transformative. The steam engine was transformative. All of these things were transformative. And they had a similar sort of impact. A lot of capital flowed towards those opportunities. They traded at very high PEs. We overestimated how quickly really it would change. Like the internet's the most recent example. The .com 1.0, there was a lot of hype and a lot of interest, but it didn't really deliver on it. It took 20 years to deliver on the promise. And probably the same thing happens with AI. We've built it out. We've got the LLMs as probably as close on current technology as we can to like as smart as they're going to get. From here on in, it's going to be the business of integrating it into the rest of business and the economy, which is a much harder, longer process. 15 or 20 years. I'm optimistic, but it takes a while.
Yeah, it does. And another aspect of that people like to talk about every time is everybody's going to be put out of work. No, but this time we really mean it. Like pin making machines, weaving
that's
machinery.
that's where I was going to go to.
Yeah, I mean Adam Smith, right? Pin making machines, weaving machines. You know, all of it, all of it. And
Since the dawn of the Industrial Revolution,
yep,
there have been people smashing the weaving
that's
machines
right.
because that was putting people out of business back then, like
Yeah.
taking away jobs back then. But as Paul Andreessen, he's the Netscape navigator, now VC,
Yep.
a
A16Z.
26
Yeah.
a 16Z, thank you.
Yeah.
And yeah, he says all of these thousands, hundreds and thousands of different types of jobs are created by every one of these innovations. That's what people are ignoring now. There are going to be lots of different jobs that we can't possibly conceive of, just as there are jobs
Yeah.
in the last few years that we couldn't have conceived of 10 years ago.
Right. And look at the internet. Look at all of the people who seem to possess very little in the way of a working brain cell, and they are online selling you perfume and whatever else. I mean, they're making an awesome living, some of them, and there are many more in existence than that. Um, it, it, it it's nothing like what is feared. The fear is always the first thing out of the gate.
Right.
You know, first out of the gate. Oh, it's going to kill jobs. You know, and it doesn't happen that way. Every time we take a leap forward, like it benefits all the people it was purported to, hurt the most.
Right.
The things that, and it's funny because the things that hurt those people are the things everybody sure is going to benefit. You know, like the welfare state. No problem. We're taking care of people on the lower end. Well, we're also supplanting heads of household with the
Right.
state and giving a huge incentive to do nothing and be unproductive, and et cetera, et cetera. I mean, I don't want to get into all that, but it's always the opposite. It's always the big expectations, big promises. We know how to engineer society. This is going to work. We know it, and it doesn't work. And then on the other end, it's this thing's new. We're not sure what we can do with it. We're terrified it's going to ruin our lives. I mean, we
Well,
have
I
it.
couldn't agree. I couldn't agree more that, you know, there's a podcast engineer on this call that, there wouldn't have been a podcast engineer 10 years ago. This is this is its own little business, the podcast, and previously
I
that
hope
wouldn't have
so.
existed. And I just think that there's just because you can't imagine how the technology is going to be used to help somebody else doesn't mean that
Right.
it's not going to help somebody else. Like clearly it does.
Yep.
I'm incredibly excited about the prospects for AI in my own business, and my kids. It'll be native to them. They grow up with it,
Yep.
using it all the time, and it's
Yeah.
to them it's just another tool.
It is. And and the unknown, people don't appreciate the fact that you don't know the future and you don't know what's going to happen, and that unknowableness is necessary, right? Because if we knew the future and we could design a society with bureaucracy, from the top down, we wouldn't need freedom, right? We need freedom. We need political freedom as much as possible, you know to maximize the benefits to everyone, right? Because things happen by people accidentally sort of bumping into each other, and ideas that come from out of nowhere, and we don't know how good it's going to be, is the truth. We think we don't know how bad it's going to, we think we know how bad it's going to be, actually, but the truth is we just don't know how good it's going to be. This is
What's
the
one?
more I read it, the people like, Hayek is the one, really, the more I appreciate this, that we can't design society. We can't engineer the future. We have to allow it to come to us.
One of the reasons that I love America and I live in America is that America really, America's imperfect in many ways, and
Mm-hmm.
it could be more free. But compared to,
Yes.
even places that are like liberal Western democracies in Europe, the UK, like that, what goes on there terrifies me. All of that sort of censorship of
Yeah.
people just expressing like pretty anodyne, benign beliefs, getting a visit from the police. That's
Right.
online. That's that sort of stuff is crazy.
I hate to say it, but not to mention your home country.
And Australia too.
Little
Yeah,
little
and
sketchy there
Australia too.
too. Yeah.
I couldn't agree more. It's
Yeah.
it's a little bit sad. It is
Right.
sad.
Which is not to say I mean I agree with your earlier statement. America is not perfect. It's like far from it, and we're under assault by our government in a similar way, but it seems like they're a step ahead of us in those other places.
America has a Bill of Rights, which makes it at least you have one little thing to fight back with.
Right.
You can get yourself to the Supreme Court, and you can argue that it's a constitution, but the Bill of Rights, I think, is the most important part. Gives you the last little bit of protection against an overreaching federal government.
Yeah, we have something else too. 120
Right to
guns
bear
for
arms.
every 120 guns for every 100 population and 15,000 hunting licenses.
Yeah, God bless America.
Yeah.
Yeah, I grew up in the country. So I grew up firing guns, so they don't bother me too much. But I get that there are a lot of people who are a little bit squeamish about them.
Sure. Yeah, I mean they're deadly, so it's nothing to be careless with. Maybe we should talk about investing though.
Let's do that.
So since it's been 2 years, let's remind folks about exactly what you do and how you do it. Let's do that for a little bit.
I run two funds.
Mm-hmm.
They're both ETFs. One is the mid cap ETF, which is the ticker is ZIG. It's the acquirer's ETF. And then I run Deep, which is a small and micro. It's the smallest of the small. They're really small, uninvestable companies, which may or may not be appropriate for an ETF, but we'll find out if they ever get some flows. So ZIG and Deep are the two funds that I run. And I look for the acquirer in the name is based on a book that I wrote called The Acquirer's Multiple. And the thesis is basically that you can find a financial value for any company, which is basically what it's worth in a negotiated transaction. And I say, because I was a corporate lawyer and I worked in private equity and transactions from 2000 to 2008, that the private equity valuations are based on operating income on one hand, which is a more full version of the earnings. It includes interest and tax and other things that are more discretionary that depend on the capital structure. And on the other side, there's enterprise value, which is a little bit more, which is the price, but it's market capitalization plus debt minus cash, plus anything else that's like a minority interest, preferred stock, anything that an acquirer would have to take on. And so I look at that as a more full, it's a souped up PE really, and it just includes all of the things that an acquirer would consider. And so that's really tells you how expensive something is. And then you want to see what are you getting for how expensive something is. And so you look at the return on assets, just its ability to generate operating income on assets, controlling for the leverage. So I'm scanning the entire universe of stocks, ranking them all on this basis, and then finding the ones that are doing the things that, because I cannot get control of these things and do anything about it like an activist or a private equity firm could, then I want a management team that's behaving as I would behave if I was in control of one of these things, which is to say that if they're undervalued and they're generating lots of free cash flow, they should be buying back stock. And so my portfolio tends to be characterized by these businesses that generate lots of operating income, trade at a reasonably cheap valuation against the total enterprise value, which includes all of the debt and all these other things, not just looking at the market capitalization. And then I want a management team that's doing sensible things. And it's either, I like acquisitions, but acquisitions done at a sensible price, and I want buybacks done at a cheap price. So my portfolio is filled with these companies where one example is, I don't know if you know, Bed Bath. I'm not saying Bed Bath Beyond. I'm having a little brain explosion at the moment. The Bath and Body Works.
Bath and Body Works. Yep, I know. We know it. We
I like
took a run at it.
It's one of the stocks that I hold.
Okay.
I like Bath and Body Works because spun out of L Brands not that long ago. They generate pretty good returns on assets. If you walk into a mall, and malls around here are pretty dead.
Yeah.
And I was doing a little. I just wanted to see. I'm not. This is not the way I invest, but I wanted to just go and see. So I was there with my son. We walked around, and I found a Bath and Body Works. And I walked in, and the few things that really stand out. It's not a huge store. It's got a fairly small footprint,
Yep.
but it was crammed with people. There were more people in the Bath and Body Works than there were in the rest of the entire mall. And it's basically they sell fragrance, which sounds like it's not obviously not the kind of thing that my son and I would ordinarily go and have a look at. But we walked past and it was full of people.
Yeah, it is.
And they're doing a $500 million buyback right now. It's a $5 billion market cap, $750 million in free cash flow, doing a $500 million buyback. These are the kind of things that, to me,
yeah,
that's a sort of situation that I can't see the future for retail, and I can't see the future for this kind of company. But all of those things together tell me that management thinks it's cheap. I think it's cheap. They're buying back stock, and this is what creates flaws for these sort of businesses. Your downside is reasonably limited because management's doing the right thing. I have a portfolio filled with these. We've got some energy, home builders that I think have been smashed to smithereens. Now I know that house building is a funny business.
Yeah,
and
it is.
One of the reasons that you should be concerned is that clearly homes are unaffordable for the median home price is unaffordable to 80%
right.
of Americans, and that's a problem.
That is.
And the solution is going to be a combination of lower interest rates and house prices coming down. That's not a disaster for the home builders because they make their money on transaction volume. So they want lots of houses being sold rather than lots of houses being sold at these premium prices.
Right.
So I think that, and all of the home building stocks are off 40 to 50%.
Yeah.
From their peaks.
Yep. And if the the prices come down, they'll still make plenty of margin from here, right?
They'll make that. That's what I think too. They'll make lots of margin. We had a similar scenario in 2001 where lumber got very expensive. Home builders sort of stopped doing business for a little bit there, and their stock prices were similarly beaten up. And then they had a very good run, and I think a similar thing happens around here. And I think it's already started. Honestly, it's been the last month or so. Home builders have sort of come back to life. For the rest of the US and for younger people in the US, I really do hope that home prices come down. But it certainly seems to me that we're getting close to that kind of scenario. There's a big build up in inventory.
Yep, it is starting to build up. That's right. People want to
sell for longer.
Yeah. They don't want to, and they'll do it. They'll if they list for 900 and they're not getting it, they'll sell it for 8 or 7 or whatever they need to get. As well, I don't mean to be rude while you're talking, but I you can see I've been doing something here. What I'm doing is I'm running the Bloomberg screen of EV over EBIT for I didn't specify market cap. I specified U.S. traded, U.S. domiciled. Okay.
Yeah.
The universe is 144 names, and I'm happy to see among the top 10 or so, Devon Energy, which I've recommended.
It's one I hold too.
Yeah, really great, well-run energy company.
Actually, I think that's one of my. I think that's one of the best. That's one of my favorite positions. I think it's probably my favorite position out of all of the 130 that I hold.
No kidding. What a coincidence. It's I have it in a portfolio of 9 names, and you've got to spend like a whole bunch more to get my newsletter at what they call the premier level, so that you can get these extra 9 names, and that's one of them. It's brilliant, but
yeah, I think it's a superbly well-run energy company.
Mm-hmm.
And the oil price is currently trading as cheaply as it has been in the last 25 years. The only 2 times that it's been cheaper than where it is now is 2000 and 2020.
Mm-hmm.
And those are famous dates. So I think that I think energy, I don't know when energy turns around. It's the same old problem that value investors always have. I don't know where the bottom is, and I don't know when it turns around.
Yep.
But the values here are pretty good. And so you might lose some on a mark-to-market basis between now and the resolution of this problem. But I think that even the positions that you're putting on now will work out over a 3 to 5 year horizon.
Yeah. Love it. Keep singing it, baby. Love it. There's actually just, apropos of nothing, just glancing at the screen here. There are like the top name, let's see, if I go, okay, the sorry, the cheapest name is something called it's actually something called Circle Internet Group, because that's a new company. It just IPO'd because it's negative 46 times. I didn't specify a positive EV over EBIT. I think they probably have a bunch of cash, and something called Eventbrite. But then you get into, something called, well, and these are all tiny market caps too. So if you go descending on the market cap, you get General Motors, Ford, Synchrony Financial, Ally Financial, Permian, Borg Warner, and lots of energy. Expand, Devon, Coterra, Permian, APA. The screen is trying to tell us something here.
Yeah, I've got a lot of energy. I have some. I'm up to my risk limits on the energy. I won't put more than 20% of the fund into any industry,
Mm-hmm.
just because it could be for profit education. I don't think energy is for profit education, but that was when the Obama administration decided that people were spending too much on useless college degrees. They wiped out all the for profit education. I think they missed the main villains in that story, but they got a lot of they got the for profit guys at least.
Right.
I think an interesting stat is Buffett is lagging the S&P 500
Oh, yeah.
by the widest margin since, and the only ones that have been wider are 2020, 2009, and 2000, which again they're all famous dates. Like obviously there's him stepping down has created some selling pressure on that stock, but
Sure.
I think that all of the indicators that I see suggest we're in that late 1990s sort of bubble-ish, market for
Yeah.
large growth, and the things that are left behind are small value. And I think that that's where the opportunity lies, probably for a decade or so. And so I'm incredibly excited about the opportunities that we're seeing right now. I think it's a good time to be a small value investor.
Yeah, man. Yeah. I agree. I own, of the individual stocks that I own, I have just a small portfolio that I actually pay a lot of attention to and actively manage, because I just want it that way. And aside from leap puts on index ETFs, that's the smallest part, obviously. I hope that's obvious. It's really natural resources and uh, and treasury bills is really what's in there. Those are the.
Natural resources have been left behind,
Yep.
as they were in the late 1990s as well.
Yeah. I mean, talk about, yeah, that's another chart that's got some suspicious dates on it, right? Like, wow, okay. Every time people get really excited about some new technology, they stop paying attention to the stuff that they are surrounded with, unless they're out in the woods. And even then, if they dig far enough, they'll, it's like you can't get away from the need for everything that is mined and extracted from the earth, and then processed, manufactured, etc. Like you can't escape it. There's no way. Like there's a book I like to cite called I think so, How the World Really Works by Vaclav Smil.
Yeah, yeah.
Yeah,
Classic.
man, and he cites cement, plastics, um, steel, and ammonia as the four ingredients of every modern city. And it's
Right.
true. Like you can't get away from those things. And the plastics, of course, come from petroleum. So like you can't get away from the extractive nature of things. And yet here we are again. You know.
Well, under Biden, remember there was that the stimulus under Biden was the Inflation Reduction Act, which was really a green
Yeah.
infrastructure building
Yeah.
stimulus, and the concern, like at that point in time, coal was trading very cheaply, which is just crazy because if you think about how you go and build a whole lot of green infrastructures, you need a whole lot of steel, and the way you make steel is you get a whole lot of coal and you burn it
Yeah.
really, really hot.
Yep.
And so all the coal mines at that time were trading very, very cheaply. I think they're still reasonably cheap, but they're not as screamingly cheap as they were then.
Right. They're 3, 4, 5x and still cheap, like 10 times or something. Like it's cheap and gushing cash,
Right.
just gushing it. You know, it's just it's like It's like the gold miners, they're cheaper at 3,300 per ounce than they were, whatever 50 or 100% ago at whatever it was, 2,000, just call it an ounce.
What what do you the gold miners? I don't hold any gold miners, and I haven't seen them in my screens yet. So I'm sort of curious to know why do you think the gold equities haven't kept up with the gold price?
You know, my first answer to all such questions is I don't know.
Yeah,
Right? No, I'm serious, and I think it's important to do that because, like, just this morning, I was on Twitter, and somebody put up that chart of the Russell 2000 I mentioned with the small caps screaming for the past 2 days, and the next post was, "Why do you think that's happening?" And I
yeah,
and I immediately said, "Who knows? If you're all honest, you don't know, and you don't. Especially
yeah.
two day,
That's right.
especially a 2 day move, right? As far as
I
not keeping up with gold, um, smarter people than me have thoughts about this, but I don't know that it's all that important to know it. I just know that opportunities are made on such divergences, and
yeah, yeah.
and that I think we're going to keep mining gold, and I think we're going to keep using it, and I think at 3,300 an ounce, it's very obvious that people are going to keep holding it as a very, very important store of value. It's
I think it's amazing that gold has now outperformed the S&P 500. I think since 2000 or something
Yeah,
is the
this
date.
century. That's right. It's amazing. It's incredible.
It's funny. I remember that Buffett letter that he wrote. I forget the date, but like the 70s, something like that, where he said, for all of the blood, sweat, and tears that I've poured into this portfolio and the people working in this, the yellow rock has beaten me for the, whatever it is since inception or something
Right.
like that.
And then sometime later, he talked about how silly it was to pull the stuff out of the ground and pile it up over here, and pull it out of the ground over here, pile it up over here. But there's obviously a lot more to it than that. I mean, it's really, he should just admit that he missed it and that he does not understand gold. I don't expect him to know everything. I don't expect him to get everything right, but I expect him to know when he's really wrong about something. you know?
What do you think? Do you think it was something like his old man was a, libertarian, hard
Oh,
money
sure.
guy, and do you think that that's maybe
Yeah.
there's something psychological going on there?
Could be. Could be. I don't, Buffett's, he's inscrutable. Who knows? Uh,
Truly.
Um, but
I've got another good data point for you.
all right.
Um, Russell 2000 hedge fund shorts
Mm.
were as high a few days ago over the weekend when I checked it as they were in 2021 at the peak.
Oh,
So hedge funds are as short the Russell 2000
as November
as they
2021.
were
Yeah.
as they were at 2021 at the peak.
All right.
So I don't really like timing tools so much. I don't use any timing tools. I just sort of collect these data points to share
Mm-hmm.
on podcasts. It's not part of my investment process, but I think it's an interesting data point because I think that you want to be fading hedge fund concentration. The hedge funds are all sort of performance chasers, and so they will all pile into a trade right before it stops working.
Yeah.
And so
Yeah. That's right.
to me, that says hedge fund long is the place to be.
Right. That's actually a good data point. I like those data points, and I agree. It may not necessarily be about timing, but it's certainly about sentiment, and it's certainly a decent way to look for the crowded trade, right? There's no there's looking for the crowded trade versus the uncrowded. Those are good things to look for. I agree. It's not about timing. It's about knowing the state of things, and that's a great way to do it. I mean, the commitments to traders. Looking at that whole thing is kind of interesting. It can be very interesting, right? Just because you want to know what everybody wants to buy right now and what everybody seems to want to sell right now. So
I got another good data point for you, Dan. I
all
picked
right.
it up from one of my favorite Twitter accounts, D Ferris 1961.
Uh-oh.
Number of listed companies per million people in the US troughed in 1979, which was the death of equities cover, and peaked in 1996, which was irrational exuberance.
Yeah. Yeah.
And we're back now to where we were in 1979, getting close.
Yep. So, you know, by that, it would suggest that it's time to get, um, it would suggest that it's time to get bullish, maybe, but it also, there's also the issue of concentration that we discussed. I don't think people. I don't know the statistic, but I know that it wasn't 40%. The top 10 of the S&P 500 weren't 40% in 1979. That much I know, and I would be surprised
What
if it was 20 or much more than that.
I think Nvidia set a record at 8% for a single stock. The single stock concentration has been sort of 6%
Mm-hmm.
previously. So I don't know if 8% is that much bigger, and it may be deserved. They seem to have done very, very well. But
Right.
the performance for the number one stock after it becomes the number one stock hasn't been great historically. Meb Faber had some good research on that.
Right. I'm glad you used the word deserved because that reminds me of something that I wanted to say earlier that I wanted to run by you, which is the dot-com bubble and its aftermath speak for themselves, right? They speak for themselves. But I think what's also been noticed, I've noticed it, others have noticed it, I'm sure you have too. Um, the market was basically right. I mean, it took 20 years to, it took the Nasdaq till 2015 to make a new high, but it took 15 or 20 years for it to all sort of work out the way everybody expected it to at the peak in 1999, early 2000. Uh, but they were right, and if you'd bought like Amazon at the top, and held it until today, you'd have made tons of money. You know, so of course, if you'd have bought Cisco at the top, you'd still be underwater, right? You can't. I mean,
Cisco's been doing better recently, though.
yeah, better reason. Yes,
It got cheap a few years ago.
yeah, it did.
I think there was a study done by, I think it was Jeremy Siegel. He looked at the Nifty 50
Mm-hmm.
stocks.
Yeah, I know what you're going to say. This is good.
And the Nifty 50 did have eventually altogether how they have collectively outperformed, or they've earned about a market return since then, which is
Mm-hmm.
pretty amazing given how expensive they were at that time.
Mm-hmm.
The problem is that, and it's probably true also of the large caps from the late 1990s, Microsoft and Walmart, and
Yep.
I don't know if Costco qualified at that time, but like you could probably take that list and they've probably all done pretty well.
Mm-hmm.
I do think that the current crop of businesses are similarly, they're very, very good businesses.
Mm.
The problem is that you get very, very good businesses at the absolute best time of the cycle, and then you project that earnings growth forward into the future, and you overestimate how well these things are going to do in the short to medium term. And so
Yes.
they get too expensive in the short to medium term.
Mm-hmm.
And it's not so much that their business stumbles, it's just that the valuation has departed from all rationality and has to come back to earth at some
Yeah,
point.
it's
And that
right.
process is a long, slow process.
That's right. It's the disconnect between that massive optimistic expectation baked into that massive PE, that massive price, versus what actually plays out. Rob Arnott from Research Affiliates wrote about top dogs. I've cited it many times because every 10 years the top dogs are different. And
Right.
every now and then you find an unusual one that hangs around in the top 10 biggest market cap companies. Those are the top dogs. And it's like a GE hung around for a while and Microsoft has hung around for a while. So, it's not perfect, but it's pretty much right. Mostly right, overwhelmingly right, in fact. you know. So,
And there's a little sampling bias, a little error there too. You have to be careful of, because we look back with the benefit of hindsight to see the
sure.
ones that have survived. And in the moment, I don't know if all of the Mag 7, I think maybe Tesla is the weakest of the Mag 7. Tesla's certainly got some very real problems at the moment. That, people don't like the brand because it's associated with Musk, who's become political.
Mm-hmm.
Internationally, it doesn't do very well because the Chinese EVs are better and cheaper. And the only thing that keeps it sort of on foot in the States is that we've prevented any of those Chinese EVs from competing here. I went to Shanghai in March
Mm.
and walked a Huawei showroom, and I had a look at their SUV and the sedan, and they're both like gorgeous leather interior, screens everywhere.
Mm.
Charge in 15 minutes. They say the charge is going to be coming down to 5 minutes. Like really
Whoa.
stunning looking vehicles. Yeah. And they're $35,000 US. This is for
and
an
we can't
SUV,
buy one because we live here.
right? But the rest of the world can. Like when I was in Santiago, Chile,
Mm-hmm.
less than a month ago, and there every single car on the road is Chinese, basically. There's a lot of Chinese cars around the rest of the world, just not in the States. So your picture of what the EV market looks like in the States is skewed by the fact that these very dominant BYD, Great Wall, all these other car companies aren't here. All you see is the Tesla and the Rivians. And I live in a place where there were people who've owned like Teslas are like Corollas here. Every second car is a Tesla. But as soon as the Rivian got released, the people who were novelty seeking and wanted to show off got the Rivians.
Oof.
And then the Cybertruck. There are bloody Cybertrucks all over this hill in fluorescent yellow and fluorescent orange and black, and like all of these people trying to like really stand out.
Yeah.
But I've noticed that there aren't a lot of the new Teslas. People have substituted the new Teslas for the Rivians because I guess I live in a blue state and a blue area and a blue state, so it's nobody wants that Musk association.
Right.
My wife drove our Tesla down to Santa Monica and got "This car supports fascism" sticker put on the window. So there's a fair bit of pushback to Tesla in this place.
Yeah. Yeah. That the protesting makes no sense to me, and the throwing Molotov cocktails at dealerships and all that stuff. It's just and putting the sticker on. It makes absolutely no sense whatsoever. If people thought about what they were doing, they go, "Oh, wait a minute." They'd say, "Well, wait a minute. If I believe all this other stuff, I can't do that to a Tesla." But
It's silly behavior, but there's an enormous amount of social pressure to not have one in certain parts of the country. And
oh
like
yeah,
it's just toxic for Musk because that's
yeah.
really the lifeblood of that business. Like they're doing a lot of other stuff there, but it's
Mm.
the cars that make the money. And I think that they've got some
Right.
real competition and there's some distaste for that brand.
Yeah,
And so
real
they got a lot
competition.
of debt.
That's right. Real competition. All the other stuff doesn't really make any money. And people like Dan Ives on Wall Street, I think he's like Wedbush. I
Yeah.
wrote about this recently. I just couldn't believe it. He says all the other stuff is worth 100 times earnings, and that they're going to, the stock's going to be whatever he said, $500 at some point soon. I was just like, no, that's not how it works. That's how it works maybe in the short term sometimes, but there certainly isn't going to be any beat and raise going on anytime soon, right?
Tesla's expensive. Like
Yeah.
Tesla's trades at 150, 200 times earnings.
Yep.
And the earnings are basically non-existent. And it's not like there's any switch that they can turn to like immediately become profitable. They're sort of at that break-even level. And unfortunately, like that's the nature of these sort like metal bending car companies they don't make a lot of money.
Mm-hmm.
There's a lot of infrastructure. There's a lot of assets in there to make not a lot of money. I'm more worried about the other car companies in the States than I am Tesla. But the other car companies are small caps now. They're not in the Mag 7. Mag 7's got to perform or it falls out, and then I think it's a long way down for Tesla.
Well, that's a song I've sung before too. I'm shocked that it's where it is. I'm shocked that it's still trading for where it is. But we could probably name 100 companies off the top of our heads that we could say the exact same thing about.
I have been shocked where Tesla is too, but if you look at the performance of Tesla over the last 5 years, like they had a huge ramp in 2020.
Mm-hmm.
And by the end of 2020, they were trading roughly where they are now. And so it's really gone nowhere for 5 years. And I think that that's bad news for these sort of stocks where really there's got to be a lot of excitement in these stocks. And if there's not a lot of excitement, then people move on and they sort of start trading more like what they're worth rather than all of this like blue sky that's built into them. There are lots of companies like this that have that big blue sky with like, they're really not delivering on the promise on a financial basis. They're saying, hey, we've got robots, we've got satellites, we've got all of this other stuff, and it's all going to be super valuable at some point, but there's no business. Robo-taxis.
Yeah, robo-taxis.
Robo-taxis have been coming since 2020. Like,
yeah. And it's worth whatever he made that statement about it being worth trillions or something. I forget exactly what it was. I thought, man, you are
Well, Kathy Wood at ARK said the whole thing was like I think she put a $6 trillion valuation on it.
yeah. Yeah, she's
And my co-host on the podcast, Jake Taylor, he went and had a look at the amount of money spent globally on transportation in any given year, and it was nowhere near that amount.
yeah. I called her. I think I called her. What did I call it? I called her the Gerald Sigh of the modern era once. You know.
Well, that may not be unfair, although she has recovered pretty well in this little whatever this is. Like there's this 2021 echo boom going on
Mhm.
right now, which
Yep.
is all of the like crypto's back, not the NFTs so much, but that people seem to be able to launch these shit coins as they call them.
Yeah.
They're just shit coins everywhere, fart coin, all this sort of silly stuff.
Yeah. I mean, I went.
Fart coin.
You go into like coinmarketcap.com, and there's like I forget what the number is, but I was like, what? I thought there was like a few thousand cryptos, and it was some number like 10,000 or 100,000, something crazy. I could pull it up, I guess, if I wanted to, but I don't need to. It's an insane number. I mean, who knows of the existence of all these things? Like, who buys them? I
Well,
don't
the
understand
kids.
how this. Yeah, I don't
I
understand
think
how this works at all. Obviously,
I think the meme stock have sort of largely gone away because they've all moved into the crypto because
yeah,
it's unregulated, so it's not like you have to do it. It's not a security, so it's not governed by the Securities and
right.
Exchange Act. So therefore, it doesn't have to follow the IPO rules, and it doesn't have to follow. They're much easier just to spin them up. You can get a little bit of software that will spin it up for you, and you can just launch one every 15 minutes if you want. Just stick a name on it and see what sticks. Like Fartcoin, evidently that got a lot of people's attention and did very well. At one point, their Fartcoin had a bigger market cap than the entire Russell 2000 ETF,
Right.
IWM.
So on coinmarketcap.com, it tells you the number of exchanges, 840, the market cap of the whole
Wow,
thing, 4.1 trillion. And
wow,
it says cryptos, like the number of cryptocurrencies tracked by coinmarket.com, 19.45 million.
wow.
It's just crazy, right? That's crazy. Like, I mean, look, to me, Bitcoin is actually really cool. I think it's cool. I do, because it's competition for it's potentially valuable. It's competition for currencies. Maybe it's some kind of new payment system. We don't really know yet. I don't, I think it's worth a speculation, though, a small one, just to see. It could be a 100x amazing thing, even from here. Who knows? Who knows? But 19
Uh,
million, I mean, you know, I don't know. Maybe that's just the way it goes. You get one valuable thing and 19.5 million unvaluable ones.
well, I think that's where all the speculation has gone this time around. I think that the stock market is pretty well sorted. Like the better companies are attracting better valuations, and the worst companies attract worse valuations. It's just that the spread, I think, is too great. They're not the better companies aren't that much better, and the worst companies aren't that much worse. And this business is a handicapping business. You can take the second horse if you can get better odds than the first horse at
Mm-hmm.
worse odds,
Mm-hmm.
and that's how you make money. You want to be a handicapper rather than picking the best horse
Right.
if you have to overpay for the best horse.
Right.
Now that point of view, that philosophy hasn't really worked since 2011. But over the very long run, when I look back with my quant hat on, uh, small relative to large has outperformed by 20 times going back to 1926. And that's an extraordinary outperformance. Since 2011, it's underperformed by about 75%.
Mm.
So you've got $25 when the guys who invested in the growth have got $100. But I think that the the points in time where we've seen this sort of level of this is unprecedented, this level of underperformance, I should say, but where we've seen underperformance historically, it's always been around these notorious bubble peaks. 2000, 2009 at the bottom, and then you have to go back to 66 was an electronics boom. Well, it was when Tronics sort of came in. And then, you go back, there are about 6 of these in the data going back to 1926, and every single one of them is a famous boom time peak. And then once the bubble sort of worked its way through the system, it went back to being the way that it always is, where small and micro and mid, if you pay a reasonable price, you get a pretty good return out of those things because they grow earnings faster. Over the long run, they have grown earnings faster. So it's the place to be, as ugly as it looks right now.
Yeah, because it's ugly in large part. All right, man. We have actually been talking for quite a while here, and it's time for our final question. I'm sorry to say. I feel like I could do this for another 2 hours. And maybe someday we will. I think, I don't know. Maybe I'd want too badly to be the Joe Rogan of finance, but there's
Do it.
Something about those long formats is you just can go so much deeper, and you're someone
I agree.
that we can do that with very well. But anyway, so let's do the final question. It's always a little bit of fun, if not a lot. Same question for every guest, no matter what the topic, even if it's non-financial. If you've already said the answer, feel free to repeat it. And the final question is for our listeners' benefit. If you could just leave them with one takeaway, if you could leave our listener with one thought today, what would you like it to be? It could be anything. I've had people say, go outside and breathe fresh air and get some exercise, all kinds of stuff.
Yeah, that's a good, okay. This is, I haven't really formulated it, but my thought is that you should be optimistic about the future. I think that it's easy to see all of the negativity out there globally and domestically and become pessimistic about it. I think that regardless of the accuracy of your predictions, you should always be optimistic that they're going to work out, because even if things don't work out, you're still better off being an optimist in that scenario, because the optimists are the ones who are going to keep on pushing forward and trying to solve the problem. And that's the best mindset to be in, whether it works out or not. So I'm forever an optimist. I got kids. I think they should be optimistic. I'm optimistic about the US. I'm optimistic about the globe. I'm optimistic about AI, technology, value, small value. I think it all works out. I think there's enough good people in the world, smart people working on good stuff. We're standing at the absolute pinnacle of civilization. I think in 25 years' time, we'll look back and it'll be a valley relative to where we are then, and another 25 years after that. So that's my message. Be an optimist, because it's the best way to be, and because it's probably what's going to happen anyway. It's going to work out.
That's an awesome message. Thank you for that. And thanks for being here as always. I promise you will be invited back sooner than 2 years next time.
Thanks so much for having me, Dan. I love chatting to you. It's always a good time.
It is. And we'll have it sooner again, as I said, rather than later. Thanks, man.
My pleasure.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.